I think there's a lot to like about On Holdings just from a traditional shoe branding and apparel perspective. I think the stock trades for a really nice multiple, really great growth rate. They're serving a phenomenally profitable market at kind of the high end of a niche market in running shoes with opportunities to expand into other sports. But the thing that has really caught my eye over the past few months is their light spray technology, and not just that technology, but what management said about it on their recent conference call. This is one of those products that could actually fundamentally change how we get shoes in the future. Instead of shipping shoes all over the world, could shoes be made at the store when you go buy them? It's not out of the question. At least on a small scale, that's something that we could see in the foreseeable future. But long term, that's something that could expand even further. So I want to dig into exactly what management said on the conference call, because I think because sometimes there are revolutions in technology and in business models that drive really long-term gains, asymmetric returns for investors. With that lens out, that's the lens with which I want to look at On Holdings today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. First, let's just show what this light spray technology is. This is a video from ON's website. You can see this light spray technology. There's a robot that is holding a shoe. What they have is the lower part of the shoe is actually put into the robot, and then there's a mold that this spray goes around, and it's just kind of a web of product that sprays the upper part of the shoe, and that's customized to the shape of your foot. This entire process takes about 3 minutes, and management has talked about how it can be more environmentally friendly. There's less waste. You're not shipping products all over the world. There are a lot of fundamental advantages to making a shoe like this. But the real revolution that I think is interesting for investors to think about is this the kind of product that could change how we're going to manufacture shoes in the future? Think about this robot arm being in a Dick's Sporting Goods store, for example. That would be a great marketing tool. And you could order a pair of shoes and you could get it just a few minutes later. This is what is potentially possible with this kind of business model. And I want to show exactly what management said about this recently. During the quarterly conference call, this is the line that stuck out to me. They said, I think first, it's really a manufacturing revolution. So we're very much moving from an OpEx-led production model to more of a CapEx-led model. What does that mean? That means that when you make a pair of shoes today, there's operating expenses that go into it. You need to sell the shoe, you need to market the shoe, you need to make the shoe, so that's gross profit, this gross margin and gross costs, and you're looking to make operating profit. A CapEx model means we're going to spend all of our money up front building a robot like this, and then it's going to be very, very high margin in the future as we make shoes. So the material that you're looking at going onto this shoe right now, very, very low cost going into that. So it'd be very high margin coming out of there. They go on to say, and this will allow us to basically manufacture shoes way closer to the customer. So think about it as nearshoring and with way less parts. So this is the first step. We have our first station right now. The goal is very clear that we can expand that significantly. So this is just the first step. This is going to bring production closer to the customer, going to create a more customizable shoe, and I think do great marketing at the same time. So how is this going to impact the income statement and the balance sheet? I think that's the other thing that we need to consider as investors. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. If On Holding becomes more of a CapEx business model, there's going to be a couple of impacts. One of them is going to be on inventory. So that's the first thing I want to show. This is a chart that shows On Holding's revenue in black and their inventory in blue. What typically happens with product companies that are making a physical good, is you have to have inventory in the ecosystem whether it's at a retailer, whether it's at your own warehouse. You have to have an actual product to sell somebody when there's that source of demand. That's the real challenge with growing a business like this, because you have to build that inventory before you can actually sell it. So you're trying to turn that inventory as much as possible while also keeping enough inventory so that the right shoe is there for the person when they actually want to buy it. Just a very difficult logistical challenge that all kinds of companies deal with. And this is one of the reasons that ON's business is so impressive, that they're growing as quickly as they are and that they're as profitable as they are. But now think about if you can make the shoe on demand. Now you have to have much less inventory. So $400 million worth of inventory on the balance sheet for $562 million worth of sales. Those are quarterly numbers. So those are very impressive levels of inventory. But now what if you could cut that inventory back by $200 million? That would give you $200 million to build out robots like this that could generate revenue for years and years to come at a very, very high margin. These shoes that we're looking at right here are selling for $330 a piece. Now, I'm not sure exactly what the costs that go into that, but given the blower, given the fact that you're spraying the upper, the marginal cost to make a shoe like that probably isn't more than $20, maybe $30. So this could potentially be an 80, 90% gross margin business. Now, the downside is you do have these capital costs that go up front. But like I said, if you're reducing inventory, you're reducing the risk of having to discount products because you have too much inventory. Remember, that's always a challenge for these branding companies. Is if you make too much product and you have to discount it, then you're going to erode at your own high-end brand. So this does a lot of things potentially for On Holdings in the future. Now, we've only seen one shoe, and that one shoe is only available in certain locations. You can't even order it in most locations right now. But imagine a future where production does move closer to the customer, where maybe On Holding does this at their own stores. Maybe they do it in a select retail partners like a Dick's. This could fundamentally change the way that we think about shoes in the future. And that's what I talked about earlier with innovation and business model changes. When these kinds of changes happen, when they're successful, they can be very transformative and disruptive to the industry. That's one of the reasons that I think On Holding from a stock perspective is so interesting to follow, because not only do you have a phenomenal existing business, you have optionality in innovation in a product like a spray-on shoe. Maybe this is the future, maybe it's not. But if it is, what is the upside for On Holding? From a revenue growth perspective, from a margin perspective, from a marketing perspective. This could be a 20-year tailwind behind the company as they introduce more and more shoes, as they innovate more and more upon this business model. That is the kind of asymmetric potential that I'm always looking for in stocks. And I think we're seeing the early phases of this potentially being a disruptive product in a kind of market that will sell all around the world in shoes. So what do you think about On spray-on shoe? Is this the kind of disruptive product that could drive the company for the next 10, 20, 30 years, just the way that Nike was driven by those little air bubbles in shoes for 10 or 20 years? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.